This meeting is being recorded.
Okay, perfect. So today we'll also have a small activity that everyone has to do at the end of the class, right? I will be giving you today's time so you can take today's entire day and do that activity. Let me stop presenting my screen and let me see if Rohan is here. Drop him a message. Okay, so before Rohan joins, can everyone maybe take, turn by turn, can everyone, introduce themselves to everyone else, so that all the persons in the group know who everyone else is. And also you can tell, what is your current occupation and where you're from, and then what is your objective of joining this boot camp, the syndicate, right? Shamkumar, if you can start with you, please.
Yeah, hi Arman, my name is Sham. I work for a bank. So I have close to 14 years of banking experience. Before that, I also worked into FMCG as well. The purpose of joining this bootcamp is to understand the new techniques, how exactly we can scale up and understand the investment strategies which is involved in startups. So predominantly, I have done many investment mutual funds, stocks, PMS, and all. Something I was looking where I exactly can invest into the startups. So that's the reason I joined this session to understand further and how exactly I can get into invested into the many startups.
Perfect, great.
Yeah, that's. I just want to understand people who invest into startup, are they called angel investor?
So the people who invest into early stage startups, like seed stage or very early stage, they are called angel investors.
Okay. Okay.
We all will be called angel investors. So for whatever investments will be doing, Rohan, so will be called angel investors. Okay, so let's start with Anil. Anil sir, can you please introduce yourself?
Hi, good morning to everybody.
Hi, Anil sir.
Yeah, my name is Anil Dangre. I'm from Pune. I'm in consultancy business. Recently, I taken off from my job. I was a GM in one Japanese MNC. Now I'm focusing on my consultancy business, then small trading and investing. And earlier I have joined this bootcamp. I know Herman very well. Yeah. And from that reference, I'm here. And I am also quite interested in new startups, so that early advantage we can get. So today I'm hoping some a good learning from here, and in coming days we'll get great opportunities to invest. Thank you, Arman.
Thank you, sir. Great. So next we have Angad. Angad, are you here?
Hello. My voice audible?
Yeah, Angad. But we cannot see you.
वो network issue will start lag हो जाएगा.
अच्छा ठीक है, no issues.
हाँ, so मतलब so small introduction, जैसे I'm sort of अभी currently working professional and investing some time to like weekend and all to sort of learn more about world of investing, trading, all sorts of opportunities that are out there. So that is my intention of joining this boot camp of angel investing also.
Perfect. Guys, we cannot see anyone. I can only see Anil sir. I can only see Shamkumar sir, but nobody else. Can everyone please switch on their cameras? Hi everyone. Okay. Perfect. Okay. So Rahul, if we can start with you, can you please introduce yourself, and then we can follow it up by Dinesh Yavalai sir.
Hello, hi everyone. This is Rahul Shetty here. In terms of professional experience, I'm having 12 years experience in insurance industry, mostly in general insurance and life insurance. Apart from that, I am running my own restaurant as well, side by side, and plus I invest in stocks and cryptos. So just to get the insight about how startup work and all the stuff, to have the other investment avenues, I have joined this bootcamp session just to learn about investing in other ways.
Perfect. Perfect. Okay. Dinesh sir, maybe if you can also introduce yourself.
Hi, good afternoon, everyone. I have done my engineering and then I joined L&T company. I was there for almost 26 years. It was a good stint at one company. And after that, I had taken early retirement. So I'm focusing fully on to investing and trading as my profession right now. And as part of this bootcamp, I want to learn more about the startup investing because that is something that I have not done till now. And this, I think, will help me basically, and all of us to get into newer avenues of investment and making profits.
Perfect. Perfect.
Yeah, Dinesh sir, from which city you are?
I am from Mumbai. I stay in Airoli.
Okay, okay. Thank you.
Previously, I used to stay in Pune also.
Okay.
I had a flat.
Okay.
Perfect. So guys, for all of you, have you noted down the schedule? Let me share my screen again. So this would be our schedule, going forward. So I have already emailed everyone the schedule, but if you haven't, I would request everyone if you can please take a screenshot of this. Right. So we'll be having a class today, and then we'll be having a class tomorrow, and then we'll follow it up on Tuesday. Right.
Hey,
I
hey
did
everyone.
Hi, Rohan.
Hi, I just want to clarify something, if it's okay with you guys. It's Sunday, 11 p.m. or 11 a.m.
AM.
It's
This
AM.
is typo.
No problem. Yeah. Cheers.
11 p.m. will not do US hours for people.
Yeah, I'm not a late night person as well, so I thought that's.
Yeah. Sorry for the slight delay. Like there was a power cut unexpected just at the time of class, so I got it delayed by a few minutes setting up an alternative power source. But yeah, cool. Thanks everyone for joining. And aren't like all the people joining, Herman? Like there are 90 plus people who have signed up, right, for the bootcamp.
Yeah, just give me a moment. Maybe I can drop another message in the WhatsApp.
Yeah. I mean, we'll start in 5 minutes so that, the rest of the people who are not joining will share recording with them anyways. Because people have joined on time, let's start after 5 minutes so that their Sunday, weekend, they can carry on with their plans as well.
So Rahul, you are staying at Mumbai or in Delhi?
Who's Rahul
Based
here?
out in Mumbai. Based out in Mumbai.
Okay.
Right. Should we start, Herman, or should we wait for?
Yeah, I suppose we can start, and I can anyway share the recording with everyone.
All right, sure. Okay, let's get started. So let me share my screen. Yeah, my screen is visible, right, Herman?
Yeah, it is.
Cool. So welcome to the bootcamp, guys. Like happy to have you all part of the syndicate. I think a lot of you have actually invested in a couple of deals already, like one or two, like amongst Record Book and Salary Box. And yeah, going forward, like I mentioned, we are in advanced stages. Like, in one of the sessions next week, we'll have people, one of the people from the senior position of a actual very popular AIF fund portal joining us and, explaining about how you can get access not just to my deal flows via a portal, but also you'll get access to multiple other deals from other top folks, like even folks from Shark Tank India run their lot of syndicate deals there. And there is a nominal cost that they charge you for opening up the access to other deals. But yeah, mine is anyway, like you are already part of my thing, so it will not be much, it will not be charged at all, in fact. So yeah, that is a very interesting one. Like I've personally invested in multiple other deals as well, right? So there's always many people, lot of syndicates, and the greater the deal flow you get, the more beneficial it is for you. So you can choose the best amongst whatever we have, as well as amongst whatever other people bring. So yeah, that's a great thing to be a part of. So in the Tuesdays class, most likely I'll plan to have him come and explain about their portal to you, and I'm sure most of you will find it very exciting. All right, so let's get started for today's session. So basically, first we'll look at what are the various metrics and the language, that a startup can, be useful, and like how we can analyze the same. So yeah, basically first is the investment thesis. So we'll look at what an investment thesis should broadly contain, and also like maybe look at how all of you can, as a small assignment, whenever you are free, we'll look at having you create your own investment thesis or strategy, so that all of you are actually learning from it and also implementing it. It's not like you'll be getting some marks or evaluated, but you'll learn a lot more about how to analyze companies. And yeah, even for founders, it's useful that when they have to pitch for their company to other investors like big VCs, or maybe sometime go to Shark Tank India, that time it will be pretty useful to be aware of these skills, even if you are not a founder, but have the desire of becoming an entrepreneur or founder in future. So this is very useful in terms of that. So basically the investment thesis is like a summary or a strategy and summary of what your investment strategy is. So yeah, broadly it contains details of your investment strategy. That is how you analyze various things of a startup. Like we also looked at in our masterclass, how to analyze and choose a right startup, right? So we'll look at creating an investment strategy, and based on the research and analysis, like come up with data points on what this thesis should contain, and what are our various factors involved. This could also be a broad concept or a contrarian concept. It's not necessary that it's like a written rule book that this should be followed every time, but it's more like a set of best practices and principles. And of course, this will evolve continuously with the market trends. So there is pandemic, which changes a bit. There's a what do you say, funding drop in the global market or recession, then that evolves according to that, and then market goes back up, then again it will evolve. So that's how we will look at creating the investment thesis. Now, why is this investment thesis required? So basically it is not a must have, but it's a very nice to have thing, because it helps you be consistent in terms of evaluating and coming up with a set of guidelines to evaluate the startup. So it will help you stay disciplined and concentrated on your investment objectives. So it is like basically, agar koi aapka known banda hai and they are coming and saying this, like they are your close friend or relative, there's a lot of emotional value comes in that, okay, main laga deta hu and things. But if you have your investment thesis in place, you can always share that with them, saying that, these are the things I follow. So even if you are be my friend and relative, if you follow at least 75% of these, if not 100%, still I'm happy to contribute. But things like there's a really bad idea, and things like like we had in Shark Tank India, someone coming and doing Nabi pet and Nabi pet thing, and the way maybe people made fun of him. So that way, like if you have your own thesis in place, then it's pretty straightforward to give a reason to people. Like we used to see what's her name, Namita or someone, the female shark. She used to say कि मैं आपके idea से connect नहीं कर पाई, so I'm out. So instead of that, if you have a thesis in place, you can directly say that these are the things I follow and look for in any startup, and that helps you have genuine data points to either select or reject a startup for investment. And it helps you stay, again, like we said, you will actually get quality deal flow from other investors as well, because once you have a thesis in place, people know you are a serious investor, and that's how you will get even more quality deal flow. Like people will know that you are a genuine person, and have a like, rather than reaching out to everyone who like might not add value coming on board as an investor, but specific people who have their thesis in place, which is published, or like have any strategy, not necessarily thesis, but any strategy defined that you look for these things in a company. That way, like people know this is a serious investor, and that way you'll get actually quality deal flow from other investors as well. And also it will be a clear indication to the startup founders that, yeah, like whether you are the right investor. So kind of covered that in the first 2 points itself, that the more analysis of yours is available to the public who are going to raise funds for a startup or the founders themselves, it gives a clear idea to them, whether you are the right fit for them. So that's why investment thesis, these are some of the top reasons why it is really good to have, and it's required actually. Now, there's always a change in the investment thesis of a VC or angel, depending on which VC or angel it is. And also for the same angel, also it keeps changing, like we said, with market trends and needs, etc. So for example, if we pick up one of the popular ones, there's one called Union Square Ventures. Unka 2007 to 2010 mein, their thesis was that they're looking for large network of engaged users, which can be differentiated through user experience and defensible through network effects. And some of their investments were at this point HC, Meetup, and Twitter. And likewise, in the next decade, from 2008 to 2017, they changed their thesis to, as the market matures, we look for less obvious network effects, because earlier they're focused on network. Now they are like less obvious network effects, focusing for infrastructure for new economy and enablers of open decentralized data. So keeping in mind, their company investments changed to MongoDB, Carta, and Coinbase. So all three of these are actually really huge companies right now. Carta is basically managing all your ESOPs of lot of startups and investment, etc. Coinbase, we all know, is for a crypto and trading platform. And MongoDB, of course, is the NoSQL DB company. So yeah, all three have actually become massive right now. And of course, we are also aware of Twitter, how big it is right now, and the others are doing really well as well. And after that, like from 2011 to 2019, they also had that they are enabling trusted brands. So there's some intersection as well between these periods. So this was sometimes expansion of their same thesis, that they're looking for more than one factors. And in 2011 to 2019, what they have been doing is enabling trusted brands that broaden access to knowledge capital and well-being by leveraging networks, platforms, and protocols, and defensible through network effects. So this was their thesis from 11 to 19, and some of their investments during this time are also listed here. So yeah, basically Duolingo, Suffer, and Stash were some of the investments done by them, keeping in mind these theses. So cool. Any questions so far before we go ahead? If any, feel free to put it in the chat, or if you want to take questions in the end, we'll do that as well. So Manisha Purohit is asking any specific difference between VC and angels. So basically, Manisha, angels are individual folks or maybe a group of folks who are like writing smaller checks, for example, us. And VC is a bigger firm, like the lead investors. You can say Tiger Global, SoftBank, Sequoia, Matrix Partners. These are all called VCs. They are basically a big fund, and they don't make so the individual investors' names don't come on the cap table for them. Whereas angels, any popular, say, CEO of a company, for example, Sachin Bansal or Kunal Shah or Ashnir Grover, these guys put in as an individual, so their individual names come. Whereas a VC is a bigger firm. That is the difference between VC and angel. All right, let's go ahead. So Avinash is asking, so a thesis is prepared by an angel or even a founder. So there's no thing written in stone, Avinash, but then every investor should have their own thesis, because it is their way of evaluating a company or a startup for investment. Now, say a lot of folks here, I think including you, are from, say, IIM and IITs, etc. So you guys will have your own thesis on how to evaluate a startup. I'm sure you will have a lot of more ideas as well, apart from what we are going to be discussing so far. But this is a thing that every investor, on an individual investor, also should have, so that's the criteria they'll use to judge any startup. And of course, VCs also have their own, like in Union Square Ventures is just visible on the screen now. So all these have their own thesis as well. Biswadeep is saying, what about investment banners? So what are you meaning by banners here, Biswadeep, if you can elaborate? Investment, are you talking about banner like an ad that is making a pitch for asking for investors to come on board? Is that what you were asking? Oh, investment bankers. Okay. Bankers, yeah, I mean, that's a complete different domain. Like they, again, like there are some intersection lines with us as well, that, like they also do it for various clients. So they understand the client's needs, that where the client wants to invest in which sectors, and, like they suggest, like it's like, you can say stock market, like a mutual fund broker you have, right? Investment banker is a sophisticated version of that they will suggest you companies which could be listed also, unlisted also. So we focus here more on unlisted because that's where we see the maximum returns. But investment bankers also come up with suitable investment options for you from listed as well as unlisted companies. And yeah, of course, their commissions are much higher than like what we are doing. So obviously, that's their main source of income. Whereas we are, like looking at this as a side thing, and also, I mean, making sure the quality of deal flow is really good. Like we did SpaceX, we did Razorpay, and now Record Book and Square, Salary Box. So yeah, that's what this week is saying. I thought they provide loan. They also do that. So there are 3 types of funding. Basically, I think we didn't cover that. So what we are covering so far is angel investment, is equity financing. So where we get stocks or equity in the company, preferred shares in the company in return for investment. Now there are 2 more types of investing. One is called debt financing, basically, where the company is given a loan, and there is a fixed interest rate, say 9%, 10%, which is payable annually. Now company, it's like a loan. You are not giving equity in the company, but you are acquiring a loan. And the third one is called revenue based financing. So there it's some of the companies, like for example Drive You, which is provides drivers to you for your cars. For example, people who don't know driving but want to have a car of their own, so there they can hire a driver. And then it's very popular these days for drink and drive. So people drive themselves and go, and then they're drinking, but they don't want to drive back and get caught. And like the traffic police are really strict these days. So there they can hire a driver to drive their car back home rather than hiring a cab. It is like they're still going in their car, and it's more cost effective than a cab also. So that is one interesting company, Drive You. Then there is a women's premium fashion boutique called Berry Lush. And there is Drink Prime, which is like a similar to, I would say, like Kent Arrow and all you would have heard. So these companies have taken revenue-based financing, which is basically it's done on founder-friendly terms, of course, and the company fixes a percentage after discussing with the founders of their monthly revenue, which they'll share with the investors. So it's like instead of getting equity in the company, or getting a percentage commission of the revenue of the company. So this is another thing, like revenue-based financing. And if anyone here is actually interested in even such deals, I do that as well on a smaller scale compared to equity, obviously, because equity financing, the returns are much higher. But anyone is interested in revenue-based financing, also we'll just collect us. So Herman, if you can collect a small poll here to check if anyone is interested in revenue-based financing and debt financing. We'll just add a poll that interested in revenue-based financing, A, then B is debt financing, and C is both, and D is none. So you can choose in the poll like which options you are interested in, along with your probably name and email and phone. We'll have a small poll, and we'll open up such deals as well if you guys are interested in that.
Yeah, just if you could give me a couple of minutes and I can create and launch it.
Yeah. Meanwhile, we'll just look at a lot of interesting questions today. So yeah, Dinesh is saying, so the domain is same. Can you let us know typically how much returns are possible? So that varies on deal to deal basis, Dinesh. Like how I share the minimum amount and what is the overall deck regarding the startup, right? So we'll be sharing the deals for that as well. So like what is the percentage commission that is being there, and what are the kind of returns? How is the company doing? First of all those details will be shared. Mihir is saying, what is the minimum amount for revenue financing? So again, that varies as company to company, Mihir. So yeah, like we co-invest, right? Like how we reduce the minimum amount by co-investing. Likewise, we will reduce to the similar numbers for even debt financing or revenue-based financing. Yeah, so we will do that. Ashok is saying Giraffe is one such platform. Yes, Ashok, correct. Giraffe is also one of these platforms where this happens. Cool. So we'll just check with you guys. So Vibhor is saying revenue payback frequency. So revenue payback frequency is typically monthly. Vibhor, like हम लोग को monthly percentage of जितना भी sale हो रहा है, whatever percentage is agreed, we get that. So it is also an interesting concept. If a company is doing well, you get a monthly revenue from them. Like it's a monthly salary for the investment that you are putting in. It's another interesting thing. And yeah, like we were focusing this bootcamp more on the equity side. If you guys want to dig deeper into that, we'll schedule another master class and separate bootcamp for revenue based financing and debt financing together as well if needed. So yeah, we can. So Harman, are you creating a poll?
Yeah, I have already created it, and let me launch it.
Okay, if you want to add another option, okay, yeah, so this is a fine then. Just about to say, if folks want another master class and bootcamp specifically focused on that, we could do that as well, where we'll cover that in detail, like how we learned how to do angel investing. And we had some founders. Likewise, we can have founders of revenue based financing come in and talk about their company, folks from the portal which deals with that and things like that. We can also arrange that if people are interested. In fact, that people can say in the chat that whether they want direct deal flow, that is also possible, or if they want a detailed masterclass and bootcamp for that. So if you want a masterclass and bootcamp separately for that, just write yes in the chat. We'll come to know that you want to have a separate focused agenda for that. Or if you want a deal flow, then just enter the poll here. That way we'll just focus on right away sharing those deals instead of having a detailed masterclass. We'll take a majority on that. I think Anita and Arjun are saying yes so far. Angad is saying if you could also discuss some prominent successful investments and some optimal ones, as well as key learning and hindsight basis experience. So Angad, we'll do that. We'll actually plan another event after this bootcamp, so that like a lot of you are actually saying yes. Biswadeep, iPhone, Rahul, Upender, Manas. So Harman, I think we have enough. Like a lot of people are actually looking at it. Maybe we can look at one separate masterclass and maybe a bootcamp for specifically revenue based and debt financing put together after our current bootcamp. If we can do after our current bootcamp, that will be great. If not, we can also start it in parallel, that on the days there is no bootcamp, we can also, if people are free, look at doing a separate session for that. We'll plan that up, guys, soon. Good question. I think someone asked such a question, and then that's how it came up. I'm just trying to recollect. I think Biswadeep had asked about investment bankers, and you think they provide loans, so that's how this topic came up. Good, Biswadeep, your question actually brought up this separate boot camp. So if we have a best question prize, which we had in our masterclass, we would have given that to you, Biswadeep. Cool. Yeah, I think a lot of folks have answered the poll. Yeah, well, the poll has ended. A lot of guys have said both. So yeah, we'll plan a separate thing for both of these. Like it's a good agenda session. Now let's go ahead in the current. Let's not dilute the attention of the current one. So now let's look at creating our own investment thesis. What all does it involve? So first and foremost, we need to conduct our own initial research. We select any industry, like we saw different sectors, for example, fintech, SaaS, D2C, and crypto and whatnot. And we conduct market research based on that industry. And then we consolidate the key information into a single report where it has data about the different trends in the industry, and then the macro or micro beliefs and assumptions, and thesis breakdown, like we saw in the previous slide, what all the thesis should actually ideally contain, and then provide the supporting evidence and proofs and insights, etc. And then we look at, after the investment thesis for the sector is ready, then we will, after the criteria has come up, we will evaluate startups that actually fit the investment thesis. तो अब पूरा हमारे पास criteria ready है, तो any startup we get, we will check कि अच्छा ये thesis को match कर रहा है या नहीं कर रहा है. That way we can evaluate whether to invest in that or not. So that is what actually even I do when I share the deals on the group, right? So I told you I reject 98% and share only the best 2% ones with you. So that's what even I look at and then share these. But then like if you create your own investment thesis, like that will also help you when we are joining the other portal. Like I mentioned, you can actually get a lot of other deal flow also, and very good ones. So if you have your investment thesis ready, that way you will actually have a good idea about, because whatever I am sharing, I'm shortlisting and sharing, but the other ones, it will be very good deals, I agree. But then if you have a basic thesis of yours in place to evaluate the startups, that way the returns will be again much more massive for in return for writing a small, coming up with a thesis. And we'll help you with the same will, you come up with a thesis, we'll help you correct it, and if whatever corrections are required, etc., yeah, we'll help you do that. And then we can evaluate whether startups with similar capabilities exist in tangential industries. And then once we consolidate all of these, then we decide on our future investment opportunity for companies that are matching these theses. Now, like, we'll dig deeper into the points. So the first point here was conduct initial research. So first we'll look at focusing on a specific industry sector that we want to focus on. And basically, to begin with, we'll pick a sector which you already have experience. For example, some folks here, if you are from the fintech background, you can select fintech as the sector. Some of you are from enterprise SaaS background, then you focus on SaaS. Some of you are founders yourself, then like whichever industry you are from, you can pick that sector where you have more knowledge. Once you come up with the initial one where you have slightly more knowledge, then we will, like people from the commerce side, like where you are on B2C, like, dealing with some customers or things like that, you should pick e-commerce or B2C. That way you have more already knowledge about that. So once we do a thing with something you're comfortable with, then we'll look at enhancing our skill base on newer sectors which you have less knowledge about, so that we can build on that. And like once you have picked the industry which you are familiar with and have passion about, and then you can also build in a firm belief about the industry's future, because like you are in that domain and you have been working for a while, so you know that industry in and out. And we'll look at first that sector for each of you, and then we do the market research. Like we said, we'll collect the actual data about the industry. This can be quantitative or qualitative, like both of them ideally. And then we look at pitch book, basically the market reports, information on private companies, etc. And there are sites like Crunchbase where you find all the details about companies' funding, what acquisitions they have made, what debts they have taken, and also business information on public and private all companies are available on Crunchbase. And there is Statista where you'll find details about market sizing and all, like what are the other companies in that sector and what is the size of that market, etc. Things like that will be available. So all of these collectively will constitute your market research. Now, how does a report structure look like? So yeah, we'll look at that. I'll just come up with the report structure. Just give me a minute. Yeah, so this is how the report structure would look like, basically in terms of investment thesis. Would be something like this. We can take a Excel spreadsheet and industry, for example, fintech, and overall figures related to current size of the industry, estimated size of the industry, and by year fastest growing subsector. For example, say it's fintech. Now this could be like lending or UPI or something like that, the subsector. And the percentage of companies with EBITDA positive and burn rate. These are the overall numbers. Then there's market opportunity. What is the CAGR, penetration of the highest growth subsector, So these things, whatever terms you're not familiar with, EBITDA, CAGR, just Google those. You'll find a lot of data. That's how you will build your knowledge about the sector. So just Google for those terms. We'll share this with you, and you can actually enhance your knowledge as well. Like we are looking at building your overall skills in terms of evaluating a company, and I think a lot of this will be very useful for you. And for angel investing, we'll look at things like total funding CAGR, active fintech startups. That is basically the competitors of theirs. And then unicorns and soonicorns. Unicorn is something which is already a unicorn. And soonicorn is company soon to become unicorn. So that is what soonicorns means. So unicorns, combined value of unicorns, and soonicorns, combined valuation of soonicorns. So these are, again, some of the factors. So we'll share this rough template with you, and you can look to build it for any specific sector that you are most comfortable with. Now we'll look at the third thing is startup by signals. So we'll look at focusing from varied factors like team management, how is the team like doing, and founding team and leadership team, the quality of theirs, like we also covered in the masterclass. Then we look at company fundamentals, how they're utilizing the funds, and like various basic processes are they in place, and then what's the traction, basically the number of users who are using the company product, and what are, if their revenue is constantly going up, if not revenue, at least the number of users that are using are increasing, different geographies that they are targeting, things like that. And finally the financials, like revenue is already covered in traction, so other things as well, like what are the spends versus savings, and all the financial related to SAM, TAM, and all the basically criteria that we look, also some of which we discussed in the masterclass. So yeah, these are various signals that we'll use to evaluate a startup by the signals for. And good investors are actually guided by patterns and not trends. So not just look at market trend, but identify patterns and successful patterns at that. So that will help you evaluate a startup better. Now, another important factor is basically the team and management. So founder fit is basically like when a company is at an early stage, we are actually investing more in the founders and his belief and his vast experience rather than actually on the product, because there's sometimes nothing much to showcase at that point. And there should be a strong alignment between the founder's background and the startup, and he should have deep industry knowledge. To give you an example, now Sachin Bansal started Flipkart after working. Sachin and Binny worked in Amazon. They understood exactly how Amazon functions, and then they started Flipkart with the deep knowledge about how Amazon works. And that's how they were able to successfully build Flipkart and take it to great heights. Like it got acquired by Walmart US, and then now it has actually acquired Walmart India. It has acquired Myntra, PhonePe. So all these brands are actually under Flipkart. Yeah, that's how like they develop expertise, and whichever you have expertise, you apply that to build industry knowledge. For example, a few years before now, after Sachin Bansal left Flipkart, he started Navi, which is a NBFC banking sector. I'm not sure if how many of you are aware of Navi. It's again a great NBFC company, and actually one of the rare companies where founder is holding more than 95% of equity himself. So he's hardly taken any funding, and less than 5%, that too the dilution is mostly through ESOPs and things like that given to the employees. And it's completely self-funded. His shares in Flipkart itself were worth 6,500 crores and above, and that's what he got for when he moved out of Flipkart. And he's still a chairman and board member, etc. in Flipkart, so he gets his lot of royalty from there as well. But 6,500 crores is not a small amount. He utilized a subset of that for building Navi, and Navi is now on the track to go public. It's almost IPO ready, and he's just waiting for the market to again boom so that he times the IPO right. Because last few IPOs we saw after Nykaa, they have not been great, like be it Zomato or Paytm or LIC. All of them have actually gone down from their actual subscription price when they went public. So that's where we felt like these angel investing and early stage startup investing that we are doing, the returns there are much more massive. Even if, say, for example, Paytm, if you had bought the shares at 100 and it's getting listed at say 2000, you have made a 20x there. And after listing, someone who bid for it at 2000 and got it at 2000, they are getting it going down to say 500, 1500 or 1800. But had you invested at 100, you are still at multiple, right? So once it goes public, you are allowed to sell yourself anytime. Once before it is public, your syndicate lead will control when it can be sold. So yeah, that I think we had already covered. Coming back to the topic here, team and management, like founder fit, we discussed. Next is their leadership style. So of course, this is kind of like on par with founder as well. It's also dependent on founder's leadership style, and then the other leaders that they hire, folks like vice president, director, etc., who are doing the actual implementation. They should have great execution and planning power, and that kind of determines the company's culture and where it is headed, etc. Yeah, culture again is the next point which I was covering. So yeah, setting up a culture is very important, because when people enjoy the culture, that's when they actually build great products. It's not like you give assigned work to someone, they will do it, but when they feel that it is their own work or their own product and company they're working on, that is when they'll deliver the best possible product for you. And of course, another important factor is the relationship between co-founders. So their skill sets and backgrounds should complement each other. For example, there's one CTO, one CEO, and CBO and COO, etc. Now, if you have CFO as well, now if you have two people who are, both only technology guys and both want to be the CTO, that kind of creates a conflict, and like they'll start having different ideas, and like a lot of difference in opinion can happen. So it's important that each of them pick up a different, even if their skills are similar, they can always develop new skills, and they'll focus on separate skill sets so that they can complement their skills and also have a collaborative work style. That way, all of these are some of the basic factors, for a successful team and management of the team. And again, the final factor that we'll look at here is the company fundamentals. So first is, of course, the product market fit, whether the product is targeted for the right market that it is looking to target, and whether it is meeting the required features that the user are looking for. And in terms of competitive edge, that what is their advantage over others. For example, let's take any UPI. So any UPI app, what is a unique differentiating feature of the new app that comes up, which will make users prefer it over, say, Google Pay or Amazon Pay, Phone Pay, etc. That is what the competitive edge here means. And then the robust business model. So they should have a solid plan in place, and not just for current but also at the future, so that all of this is very well planned and they have a clear agenda in terms of what they are looking to target. And of course, there's a high barrier entry. Yeah, that is, again, there are a lot of other players in the field, and there could be a high barrier entry. Again, now the next factor would be the traction. So we'll look at the unit economics, engagement rate, retention rate, and DAO-MAO ratio. So again, request you all to, we'll share these terms with you, or if you want to make a note, you can just make a note of these. These are some of the important things. Like the more you Google and research, the more you will learn. Like we'll try to cover as much as possible in these sessions, but we'll also make sure that you have your own interest. Now, instead of writing DAO-MAO, what is the full form of that here? Then you already know it. But now if I write this, you will take some interest if you don't know to figure out what these are. So that way you are more engaged, and it's kind of a learning for you as well. So these are important factors in terms of traction, that what are the unit economics. Example, SaaS companies. So I'll tell you this one. I think most of you are aware, we covered it. Software as a service companies, LTV CAC ratio of 4:1 is considered high, healthy contribution margin. So we see 4:1 is the minimum ratio, and 5 onwards, it's even really good. So that is the ratio we look at for SaaS companies. And engagement rate, 3 to 6% of engagement is considered high engagement rate for apps and websites. So a lot of ads, people click on Google ads, Facebook ads, right? So the people who click on those, at least 3 to 6%, actually they stay on and say browse for a longer time or even end up shopping. So those are the kind of engagement rates that we are looking at. And retention rate of 25 to 30% is really good. Retention rate, what we mean here is, एक बंदे ने एक बार shopping किया, now next time he comes back to the same shop site and shops again. For example, say a gifting site. Now there's an Indian startup called igp.com, which is indianggiftsportal.com. They're kind of building an online Archies or customized gifts as well, and a lot of plants, cakes and stuff like that. Now they have a very high retention rate. So that's what, like, एक बार एक बंदा आकर shopping किया, तो their quality of product and service is that good that people have to come again, and whenever they have a similar requirement, they will come to the same thing. That's what we mean by the retention rate. DAO and MAO, I'll leave it to you for an small assignment, figure out what it is, and then like basically less than 20% indicates very strong stickiness for attraction, user like company traction. Next, let's look at the financials. So we'll take a small break after this slide, and we'll check again if any of you have any questions so far. So we'll look at the financials. Different financials that we look up for a startup are basically revenue, burn rate, balance sheet. Revenue, again, we covered what is the kind of revenue they are making and what is the gross margin, like what is the profit, or how much are they losing if they're not profitable yet. Burn rate, again, is basically how much you are losing, or how much are you spending to get the revenue that you are getting. And of course, the balance sheet of the company will give you an idea whether there is strong cash position, no debt, and things, a lot of other things. So these are the things we will look at in terms of financials. So yeah, again, let's take a small break here. Like we are not kept too many quizzes here because now we all have a good idea. We kept the previous one like that. Now we'll just look at if anyone has some more questions based on what we discovered so far. So I just opened the chat. Vibhor is saying aware of Navi. Yeah, good Vibhor. Like Biswadeep is saying, but Sachin's experiences in e-commerce, not in NBFC. So how to decide for investing or for founder fit? Interesting. So Biswadeep, Sachin was seeing a lot of things in Flipkart, right? And then starting PhonePe was kind of his decision. Flipkart के ही senior leadership log actually they started PhonePe, and it was always clear to them internally that they will build a great product and then Flipkart will acquire them. So PhonePe is a complete fintech product, and the next logical step was to expand to NBFC. So actually Sachin has great fintech expertise and a lot of Flipkart's related checkout and whatever offer zone, etc. Some of them he took deep interest in himself. So he has great fit in terms of that. So that's what I was saying, that if we do our own research and find out about some of these, which we will plan to ask all of you to do as well, that way you will also discover more about founder fit and industry and all. But yeah, interesting question. Manisha, when you send us an investment opportunity, what would be the most top startup signal that we can evaluate? So all of the things that we discussed, Manisha, like things like team management, company fundamentals, traction, financials. So you all should be guided by, I'm sure you are in doing investment, it's started on the investment in terms of angel investing, but you are doing a lot of other investments already, be it gold or FDs or mutual funds or whatever, like public companies. So now you have to be guided by patterns and things that we discussed and not just the market trends. So these are some of the different factors that we will look at, like the founding team and the leadership team and the company fundamentals, how they are, and then the traction in terms of revenue, gross margins, LTV CAC, and things like that. And of course, the financials in terms of how much is the burn rate and what is the scope of turning profitable or break even and things like that. So these are the various factors. Mihir is saying, I think if you can analyze a sector company with all your criteria, it would be insightful. Sure, Mihir will plan that. Arvind is saying engagement rate. Yeah, so engagement rate, question mark. Is that a question? What engagement rate is? So we covered that, right? Engagement rate is basically when it's the kind of someone comes to your platform, how likely are they to continue browsing it rather than say, I mean, Facebook ad automatic, you are watching a YouTube video, some ad comes up. Now, do you do a skip ad as soon as you get that option, or do you continue watching and you want to learn more about that? That is an example of a basic engagement rate. And the next step logical is they will have a link to go to their site. So how many of you go to the site, browse there, and spend time or possibly even shop there if you find something useful? That is what we mean by engagement rate. Mihir is saying, or if you can share your working of already analyzed. Yeah, Mihir, we will do that soon. Dinesh, how do we get access to financial report for unlisted companies, balance sheet, revenue, etc.? So Dinesh, these will not be easily available for unlisted companies, but I mean, revenue, you can find it online. Or of course, whatever decks I share with you, right, that has details of all of these, like revenue and things of the founders. All of these are available. So you can actually pick up, for example, even salary box and record book, all their revenue numbers, etc., are already shared with you, and even what valuation they are looking to raise at. So those also could be a good example, that pick that up and try to use that to come up with an investment thesis on that sector. Dinesh is saying, why companies take so much time to upload balance sheets and results? Are they cooked up? No, Dinesh, it's a very stringent process that is followed here. Like they do it themselves, and then it's actually done by CAs which approve that, all that, and there's a lot of external people involved, so that it is not cooked up, it is actual data. And there are some few founders, for example, many years back, Satyam Technologies, they were they were a very popular company, but a lot of their data was cooked up, and then you can get initial results for it, like you can get funding or whatever, but once you're caught, right, it's you end up in jail, and like your funding, still whatever you have got, you have to return it back, and then your interest on top of that. So it's not ideally good to cook such things up. 99.9% people don't, but yeah, 0.1% exist though who might be doing that. Viswadeep, for financial, do we need to look at projection and financial ratios like profitability, debt, equity, ROCE, or past trends? Yeah, Biswadeep, good set of points. Again, a lot of interesting questions by Biswadeep. So yes, you can, of course, that's the basic framework or list that we have come up with. But if you have such suggestions, of course, you should look at that. We are coming up with a basic set of criteria in terms of the thesis, what all it should contain. But yes, these are good value additions that you have suggested. Angad is saying, sir, as per your experience for successful investments and suboptimal ones over the years and the learnings from them in hindsight, whenever that could be touched on. Sure, Angad, this is a feedback another person has also suggested. So we'll take this as feedback and we'll try to cover this. Vibhor is saying, yes, bank. Jignesh is saying, some of us joined last Sunday, so didn't get details about salary book and other companies you have shared. So Jignesh, every company has a timeline. So yeah, we'll soon share other companies very soon with you. In fact, Tuesday's class, we will have a big portal person coming in and talking to you about the same. So there you'll start getting access to multiple deals. I'll start putting my deals there instead of like what last time you had to do a UPI to me. This is a much cleaner way where yeah, like you'll actually be able to invest online and you will get a document on your name, and basically there's something called drawdown notice. So the investment which you do, it will be via online mode, where you can have different options to do the account transfer, and it will go directly to their portal, not to any of us. And the portal will manage your investment, and the collective salary, like share purchase, will be on the company portal's name, but they will actually issue drawdown notices on each of your names. So you will get a investment proof on your name, which like will be great to have. Yeah, Vibhor is saying Yes Bank cooked figures. Yeah, I couldn't relate from a previous message, but yes, Yes Bank was another example who cooked up figures and then they landed into deep shit and founders were in trouble and things like that. Correct. Good example, Vibhor. Sham Kumar is saying, can elaborate debt and equity investment raised by startups. So like I said, Sham, there are three forms. One is equity financing, what we are doing by angel investment. There is debt financing, which is like a loan. So yeah, company fix करती है investors की 9%, 10%, 12%. This type, you can get the funding on a specific annual payable loan amount. And we will cover this as well as revenue-based financing, which is basically investors get a percentage revenue each month on month. You will get revenue from the company in return for your investment. So we'll have a separate, like there's Akshay and Harman here. We'll discuss and come up with a separate bootcamp specifically for this. Can you share some last 10 company details where you have shared an investment done by you, just to get an idea? So Jignesh, I had shared, I think all of a few here have attended at least the master class, right? That's how you joined. And in my master class, I shared my screen and showcased my portfolio and gave you an idea. Like Spenmo was one of the top performers, which has gone up 35x. There's Rupify, Indian company. Then there's SpaceX, there's Razorpay, some of the companies that we have invested in. And yeah, like very soon, starting maybe end of next week, after next week's call with, the portal person coming and talking to you guys, immediately we'll share a link for you to sign up on, and then we'll get started with that, where you'll start getting access to deals starting maybe end of next week itself. A lot of interesting deals, not just mine, like a lot of my deals, of course, but also by other good syndicates as well. All right, great set of questions. Let's go ahead. Financials of the company. So revenue, burn rate, balance sheet, we looked at this. Sorry, we were on the screen. So basically now what are the different activities that you all can look to do? So we come up with a this is what we are planning to give you as a small assignment based on what we discussed so far. That there's no time, like maybe we come up with say timeline of a week by next week. Does that work for you guys? Or Harman, do you have any suggestions here?
Well, it mostly depends on how folks want to do it, but what I thought while designing this activity was maybe we can give 1 day, and this do not need to be a very elaborate kind of exercise. But yeah, if you feel like this should take 1 week, we can keep it as let's 1 week also.
Yeah, you guys suggest in chat what you think. Like basically it's small activity where you will determine what percentage of the company is sold and how much of the original investors diluted. Research about various valuation methods, one each for pre-revenue companies and growth stage companies. So this is not even a thesis. This is just a set of small data that you can come up with as an initial task. So yeah, if 2-3 days works good, like we could do that. Just spend, I think, 1 hour of time of research, 1 to 2 hours should be enough to do this. But if you need a larger time, do let us know. I'm sure all of you have your own plans for weekend or like work hours, things that you focus on. So do let us know what you guys feel in chat, that how much time is ideal for this activity. And then once if it's done sooner, we can also go over and discuss about that in one of our classes itself.
Yeah.
So in fact, Tuesday we have a class. After that, I think we have on Thursday. So today is still Saturday. So if by next Tuesday or Wednesday, everyone can do this, in Thursday's class, we can also discuss some of the top ways to look at this. So yeah, please share resource for research and any reading material. So that's what we were covering so far, right? Like I was telling you guys, make a small note of whatever we are covering. But in case you need data, we'll share that on the group, or Harman will share certain things if you need anything. But yeah, I would suggest like just take a screenshot of this, or if you want us to send, we'll take a screenshot and share it on the group. And like this is something which can be done independently of what we have covered so far. So it's like knowing what we have covered so far enhances your knowledge on the same, but you can just Google and pick up any company and come up with the data for this. But in case you need some suggestions, do let us know. We'll come up with something and share that with you in terms of source. Basically, the main source, the Sham is asking, please share source. So the main source here, Sham, is Google. You have to Google for these things, and you'll find a lot of data. The more you Google and read, the more your knowledge enhances. So yeah.
So Rohan, what I can do is I designed, first of all, a document wherein everyone can, have the document for the entirety of the bootcamp, and wherein we'll be, uploading all the recordings and all the presentations and all the assignments on that one document, so that it's easier for everyone, to go to one place and then see whatever they want. And if I can take a couple of minutes of everyone, and I can just showcase what all is there and how can they access all the recordings and how will it be shared. And
yeah, instead of a document, we'll come up with a Google folder.
That is the entire thing.
Okay, so I'll stop my screen share. Harman will share that with you, like how you guys can access it in a single page.
Yeah. Just let me know if you can see my screen.
Yes, we can.
So this is a small, Google Doc file that I had created. So this, first of all, I have shared the bootcamp schedule here, so that this is the only file that you need. And if you go on the, the WhatsApp group that you're a part of, in the description you will be able to find the link of this Google Sheet, and I've also emailed it to everyone, right? In this, you would find the day-wise, resources of all the classes. So day one PPT has already been updated. The PPT that we were discussing right now, recording would be updated after this class. The assignment which Rohan was discussing, like the research on valuation techniques, one each in pre-development growth stage, that has also been updated here. So what you can do is, even instead of emailing me, you can just go on to this Google form, and herein you can do your assignment, complete your assignment, submit your name, your phone number, your email, and describe the describe the pre-revenue and post-revenue techniques, right? Herein is one of the resources that I used while I designed this. Right? So you can just go through this, resource. Also, once you go on this link, you will, on the right-hand side, you will find, there is a list of masterclasses here. Also, this is a good repository of various resources which you can, if you have time, these are all 1 hour 45-minute lectures. If you want to go through, you can just go through it. So these are very, very good classes based on due diligence, based on different investment techniques and startup valuations. So this is the second class here, which you can go through on startup valuations. If you go through here, you would be able to find multiple investment techniques, both pre-revenue as well as post growth stage, right? So this is one thing. Second, what I'll also do is this would also be a long exercise for all you guys. So the objective would be to create your own investment thesis, right? So this is a small template that I was creating. I haven't fully finalized it, right? So the idea would be I will share this template with all of you, right? And then you would have to create your own investment thesis. Investment thesis could be around, an industry. So if you want to invest in, let's say, 3 different industries, so you can maybe have 3 industries, or maybe have an investment thesis that encompasses all of the 3 industries, right? Herein, first we'll discuss about the quantitative analysis and do a quantitative analysis, and then we'll also do a qualitative analysis, right here. So this I'll share with you, and then I'll also create a company valuation template wherein for each company, how do you, there would be a checklist of all the things which you can, keep it for yourself, and then maybe we can keep a scoring system which can tell you if this company is good or not, and then you can make more objective decisions, right? So this I'll share with you once it's completed. This is right now a work in progress, right? This document I've already shared it with you. In case you feel like there is a need for any other resources, so in this document, just at the bottom, if you go here, I have shared a drive folder, right? You go on to this drive folder. This is a resource page wherein I have added all the ebooks, and whatever I find things interesting, I keep on adding it here, right? So I'll keep on updating this list as we go forward. So this is something that we'll keep on updating even after the bootcamp, and maybe 6 months, 1 year after the after all this classes also. And so this is something that you can keep it for yourself, and this would be a repository that will only increase and increase and increase, right? So for all those who want the link, I can also quickly share it here. This is the link. Just a moment. Okay, so I've shared it in the chat also. So you can go here. Okay. The assignment or the activity for today is you have to learn or describe 2 different valuation techniques. One is for a company that isn't making any revenue till now, there is no traction, and second, a company that has already gained some kind of traction, right? That video should be enough, but then it wouldn't be discussing too much about DCF technique. So DCF, maybe you can go on YouTube and you can see it. It's more like a growth stage valuation technique, right? And if
let's try and create a thing like 4 days, I think, is a reasonable timeline. We have a class tomorrow, then we have on Tuesday where the portal people will come, then next class is on Thursday. So if you guys can, Saturday, Sunday, Monday, Tuesday, Wednesday, 5 days. So 5 days is a good timeline. So if by Wednesday, end of day, you can, submit your things to Herman or wherever the links are shared. Thursday, we can look at discussing those in detail. And let me know if 5 days is a reasonable timeline. If anyone has looking for a longer timeline, do comment in the chat that they need more time, then we'll look at that. If not, I think 5 days is a pretty decent thing, and we can discuss that on Thursday's bootcamp class. So in the document, then we'll write 7 days, 5 days, Herman, so that you can write Wednesday end of day, so that people have 5 days time as well, and we'll discuss it on Thursday. Yeah, great set of things, the resources that you have shared, Herman. So yeah, thanks for sharing that with the folks, and I think it will be useful to help them get started.
Yeah.
Cool. I think that's what we had planned for today's class. So yeah, we were covering most of the questions along the way. So let us know in case anyone else has any final set of questions. You can unmute yourself and speak rather than put on the chat. If not, we'll allow you to carry on with your Saturday plans.
Maybe I can allow everyone to directly unmute themselves, and if you guys have any questions, you can ask your question directly.
Yes.
I have a question. Can I go ahead?
Yeah, Biswadeep.
So what is the assignment? Like, you have to do evaluation, but also like sector analysis, etc. That was also fun. So you have to do.
You only have to research about two different valuation techniques, one for pre-revenue and one for growth stage companies.
So you can just check the link. Basically, all the detail of the activity will be mentioned there. So just look at that.
Right.
Let's not confuse. Like, there's a tiny URL link shared by Herman, and you can look at that in terms of what is expected in the activity. So Herman, can we add the exact yeah, we have already added, right? What is the activity needed there?
Yeah.
Or
it's added on the day one header.
Yeah.
Right. One more question, that is, I have seen that, often detailed data is not available for startups, and they only share some kind of pitch deck or only, few data only. So in that case, like how to go ahead, through industry analysis or how?
Yeah, I mean, see, there's no fixed thing written in stone here. Like, the more you research, the more innovative techniques you will come up with. In case you're not getting an idea, like, do drop me or Herman a message on WhatsApp, and we'll be happy to help you. But we'll help, like, we have provided a good set of resources to at least help you get started. In case you guys, anyone of you face any difficulty, this is not like something that's going to be evaluated. Just let us know. We will help you with that.
Yeah,
just
right.
for your interest, like for your learning and things like that.
Yeah, thank you.
Yeah.
No
Hi, Arman.
worries.
Can I take 1 minute?
Yeah.
So thank you, Rohan. Thank you, Herman, for your good presentation. So this is basic, just beginning, and we are now learning slowly. So in coming sessions, we will get more and more things, and there will be more clarity on that.
Correct.
Just one explanation for this session. We got subscription through Bootcamp and Rohan Syndicate after paying that initial amount, right?
Correct.
And whoever is present in today's class, they have come through the same procedure, right?
Yes.
And after that, we got the those links so that we can invest in those startups, whatever you suggested, like their
Correct.
salary and all. And then we, as per our budget, we invested in that.
Correct. So going forward, like I mentioned, from Tuesday, like some people even joined after the two startups were shared, but don't worry, like this is a lifetime thing. Like, I mean, from Tuesday, another portal person will be coming, and I have put my syndicate there. So going forward, all the investments you can actually do via portal itself, and you'll get access not just to, like I mentioned, my deals, but also deals by other top syndicates.
Okay.
They have a wallet kind of, just to give you a brief idea, they have a wallet kind of system where you top up money and keep it in a wallet in their site, like how you have Amazon wallet, Amazon Pay balance and things.
Okay.
You keep a wallet there, and whichever company you choose to invest in, you deduct from your wallet and then use that. So that's how they function. And all of those they're a SEBI approved AIF fund. So yeah, they're one of the top. I'm not going to reveal the name now. I'll keep it as a surprise for you guys to look forward to Tuesday's class. But yeah, like they're a top fund, and a lot of actual sharks from Shark Tank, etc., are also registered there.
Okay. And this subscription, somebody told, is for just 1 year?
No. So for folks who are here, this is a lifetime thing. Like, normal package is 1 year, but anyone who has signed up now, like in the workshops, where you all have signed through, for my syndicate, it's a lifetime membership.
Oh, great. So I was thinking this is just for 1 year, and after 1 year, if suppose another big opportunity comes, so again we have to go through the registration procedure and all.
No.
So Herman,
for
this is
now,
clear to all?
Yeah, for now, this is for you guys. It's for 1 year, but yes, going forward, already some of them we are doing for just 1 year. So yeah, like you guys are the first batch who have got lifetime access for 10,000 rupees. In fact, actually less than that. We got ebooks worth 3,000, so 7,000 plus. Again, request you all to start referring your people. Herman will share a common referral link so that if people want to refer their friends and stuff, family, they can actually refer the link. Maybe the original bootcamp sign up link, you can share that, something like that people can refer.
We can share a separate link, and then everyone.
We have a landing
again, they
page
have to. Yeah, sorry, but again for the referral, they have to pay the initial subscription fee, no?
Correct.
Okay.
So if some of you have genuine referrals, like actually now we have made it 1 year, we are only giving 1 year membership, but then for people who are lifetime members like you guys, we will allow you to do a lifetime referral membership as well. So on a 14,999, people can actually, yours was the discounted price, but for 14,999, people can get lifetime access.
Okay. Okay.
So we will
And,
create a link and share that with you. Like Harman will share it in the group so that you can just forward that, and you can share our YouTube link as well of the video, which is basically what was covered in the masterclass. So you can share that as a source of information and share the sign up link, where anyone who signs up through that will let us know via message that who all you are sharing via thing, or we'll add a small column in the form like a referred by, and anywhere where your details are shared, like either you tell us the names of people who are signing up through you, or they enter it in the referral form themselves, then you will be getting a referral payout per person who referred by you joins.
Great. Okay. Now, last question. Suppose my budget for this startup funding is, my personal budget is 10 lakhs. So how many companies you suggest we should go with, and minimum amount in each company?
So I would suggest the 10 lakh you're suggesting is your annual budget or a lifetime budget, or like
A lifetime budget. I will not invest more than 10 lakhs in coming 2 years
Sure.
only.
Okay, 2 years. So you're saying 5 lakh per year basically then.
Right.
So now I would say now 5 lakh, divide it equally, like keep it as a maybe 20K per startup that you like. Now we'll share startups with you which are already filtered, but then you can, like, based on what you come up with your own investment thesis, you can suggest like which companies you can decide 20K, or if you really like, you can even put 50K. Like some of the other deals, for example, I am keeping a lot of that to be, middle class friendly, 15K, 20K, but there will be other deals in the public where like syndicate, where other syndicates are like starting at minimum 50,000, minimum 1 lakh as well. So you can keep certain like percentage, say 20% of your funds reserved for public deals, so that you will get great deals other than my syndicate as well. And then my syndicate, again, like right now we are doing mostly equity based financing, which I'm sharing. So we will also look at another bootcamp with debt and revenue financing. So maybe say if you have a annual budget of 5 lakh, you keep 3 lakhs for what we have done so far, equity based financing per year, and 2 lakhs you could do maybe 1 lakh for a one-time 1 lakh investment in a very good public syndicate fund, and 1 lakh for combination of say revenue or debt financing, whatever you like. So that would be my suggestion for this ratio.
Great. Thank you.
No worries. Shyam is asking how to monetize referrals. So Shyam, we will share a link with a place where you can share directly with your referrals, and maybe a small field there where they can enter the referral name themselves, or you tell us the folks specifically who you have referred, their names, tell us that these will be joining through us, and then like for each referral who joins the same day or the next day, you will get your referral payout. It's not like you have to wait 90 days and things like that. Within 48 hours, I will say that instead of 90 days, you will get your referral payout within 48 hours of the signing.
Perfect.
And that, yeah, cool. I think we have addressed most of the questions, and yeah, like very interesting first class, lot of interesting questions by Biswadeep and Arvind, not Arvind, Avinash, and of course Vibhor, Shyam, Nilesh. Nilesh has raised his hand. Nilesh, do you have a question?
Yeah, Rohan, thank you for giving me a chance. Okay, I have one question. When you are mentioning that you are going to have a portal where other under syndicates will be available for investment. My question is that, like we have joined your syndicate by paying out a certain amount to get a membership, would that be also the case with the other syndicates also? We have to join each one of them in order to invest into them?
So you will not have a per syndicate joining fee. Like it will be a common syndicate fee, one-time fee that the other portal will come and explain to you actually. So you will have a common one-time fee for lifetime access to all the syndicates. So it's like this was 10,000 just for my syndicate. There'll be one common fee for access to all public syndicates. So all the Shark Tank folks and a lot of founders, Kunal Shah, and a lot of interesting. There'll be a one-time thing which is basically a AIF fund fee. So that is actually charged by SEBI and AIF. So it is in order to regulate your transactions and have shares on your name, provide you the actual share certificates on your name and things like that. So in सबका common एक charge होगा. वो I think the portal ones will be the best ones. So they'll tell you on Tuesday. but it's not going to be expensive. It's just a one-time fee for all syndicates put together, which will also take care of your legal agreement related costs for all the deals that you will be doing and things like that.
Thank you. And one more question which I had posted over here. As we know that, okay, while doing the investing during a certain funding round, we get a certain number of equities, 2%, 1%, whatever the fraction also. But in the subsequent round, it gets diluted. Could you touch upon on this dilution? How does that work out and how much the dilution happens? How does that happen?
So as investors, you are saying, or as founders?
As investors.
As investors, you will not have any dilution. Like basically, I mean, dilution will be there in terms of how the valuation is going up, but the number of shares or whatever you hold will remain the same. Now, the syndicate lead, which is me in some cases and other big VCs in some cases, they will decide when to exit. So either the next round, your shares will continue invested if the company is doing well, and your shares will continue growing by a multiple. And you'll also have the option to do pro rata. You have pro rata rights. So basically, you will have an option to buy additional shares in the next round at a discounted price. And yeah, dilution is basically in terms of key. Suppose apne you invested 50,000 rupees in a total fundraise of $1 million. Now they are doing $10 million more at some higher valuation. Now, so the overall money that you have invested remains the same, and the dilution is basically the percentage of your share in the overall company goes down. But then your number of shares that you purchased for that amount remains the same, right? तो आपको अगर 50,000 में 15 या 20 शेयर मिले कंपनी के, just giving an example, you will actually get more than 50. So if you have got 50 shares, for example, now those 50 shares will continue to remain on your name. Only the amount of your ownership in the company is going down because the company is growing more. But आप जब 50 shares बेचोगे, आपको 50 shares का value तब भी मिलेगा. Yeah. Cool. Thanks, guys. Thanks a lot for all the interesting questions. We had a very interesting first bootcamp class. I hope all of you found it interesting too. And yeah, we've come up with a small activity. It will be great if you guys can do that by Wednesday. And yeah, look forward to discussing with you more on Thursday on that. And also tomorrow we have another bootcamp class scheduled, interesting one. And of course, Tuesday, I request you, none of you should miss the Tuesday's class because a great country leading portal will be featured on Tuesday. A person from the portal himself have requested him to come and talk to you guys and explain all the benefits, which will open up a lot more deal access to you, as you will kind of be recognized angel investors, like how people are reaching out to me on LinkedIn to invest in their company and asking for details on how they can invest. You will become recognized angel investors if you sign up with their portal, and you will have a lot of interesting founders also reach out to you, and you get access to public syndicate basis, basically deals related to various other interesting startup founders. So yeah, request you all to make sure that you kind of attend Tuesday's class. Other classes still, it's okay if you are busy, you get access to recordings. But my suggestion would be the Tuesday's class is the most interesting class of all the bootcamp sessions. So do attend that. Of course, after that, we will have founder pitches as well, which are very interesting, where founders will directly come and talk to you about the company. And then I'll give you an option to invest in all of those companies by those founders if you find them interesting. Those are also going to be really interesting. So yeah, we have lined up a very interesting bootcamp for you all. Again, at a very nominal one-time sign-up fee, which includes bootcamp as well as lifetime syndicate membership. So yeah, great deal for all of you guys. And do refer any of your friends and colleagues and apartment folks or whatever in your network, and it will be a great thing for them as well, I'm sure. And you will also get the referral benefit out of it.
So just before everyone leaves, guys, I have just shared the feedback form link in the Zoom chat. So I would request everyone to please, go through it and just let us know how was the class experience today, and given your feedback, right? And how can we improve the classes further? Before that, if we can, Rohan, if we can take another question again. So Angad is asking what is pro rata rights, and we could explain it again.
Yeah, pro rata is basically anyone who has got preferred shares, Angad, like what we get in most 90% of the deals that I share with you, we get pro rata rights. Pro rata is nothing but you have the option to buy shares in the next round of fundraise by the company at a discounted price. So you have preferred shares which have the right to first exit, as well as pro rata rights which allow you to get shares sometimes at a 15%, sometimes even at a 20% discount to their actual fundraise. So some of you who are in public companies right now, they might have this option of ESPP in their company, which is Employee Stock Purchase Plan. Likewise, being shareholders in company, here you will have access to pro rata rights, which is purchasing discounted shares of the non-listed company at a very good price.
Okay. So guys, you can just go and fill out the feedback form.
Yeah, request you all to fill the feedback form so that we get some data around, like how you felt the classes and was the session useful to you. And if you want anything specific to be covered, also you can suggest. Dinesh is asking, please cover how to join the syndicate on the given link. So yes, Dinesh, I plan to cover that maybe in tomorrow's class or one of the classes in the bootcamp, because we had planned this session till 1 o'clock. We are actually at 1:22. So we don't want to everyone, Saturday, they might have their own plans. And also it's on borderline lunchtime for most of us. So let's cover that in tomorrow's class in detail.
Okay, guys, any other questions you might have, please feel free to ask all the questions.
So likewise, this, like a message in chat, Dinesh, like all of you, just take the time to fill the feedback form 1 minute, and you can suggest what all you want to be covered. If you have any specific preferences, please share it in the feedback form, and we'll look at addressing that maybe in tomorrow's class or any other class in the bootcamp. If you have anything specific that you're looking to be covered. Ganesh is saying it's a working Saturday, no plans. Yeah, Ganesh, even I'm working. I'm, taking the session for you all, and yeah, like have some other work-related stuff as well planned. So yeah, that's how it goes. It's by choice. People do various things. So yeah. Cool. Thanks a lot, everyone. Just will be great if you can fill the feedback form, and yeah, look forward to having you all in tomorrow's bootcamp class, and again, especially on Tuesday's one. Thank you, everyone, for the interesting session. I had a great time, answering all your questions and having this session. And thanks, Harman, for creating the detailed document for sharing with folks. It's really useful for them to get started.
Sure. Great.
Cool.
So yeah. Okay. Thank you, Rohan. Thank you for the wonderful session. And tomorrow, the time for the class would be 11 a.m. in the morning.
Yes.
Tomorrow's a Sunday, so we'll be meeting at 11 a.m. And of course, the WhatsApp group is open. If you feel any difficulties while doing the assignments or any other issues, right? Please feel free. We'll be here. I'll be in the group itself. We'll be here, and we'll try to resolve all the queries as soon as we can. Right?
Yeah. Request you all that if it's a trivial question, like either message Harman or me one-on-one, it will be better. If you feel it's something that will be relevant to the entire group, then post it on the group, because there are a lot of folks on the group, so we don't want to make it as a spam entity. So you can either direct message Harman or me for smaller doubts or questions, and if you feel it's a big question which is relevant to the entire group, then post it on the group. Cool. Thank you, everyone. Have a great Saturday, and see you tomorrow. Bye-bye.
Thank you, Rohan. Thank you, everyone. And okay, bye-bye, everyone.